Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Numbers for Q1. In terms of revenues, we have basically delivered a top-line growth of 21% at 1,193 crores. EBITDA has grown 25%, touching 307 crores. Our EBITDA margins are at 26%, up 1% from last fiscal. Net profit has surged 47% to 120 crores. The net profit margin is at 10%. We have basically seen gross R&D spends at 88 crores, net R&D spends at 44 crores. R&D spends excluding Syngene as a percentage of revenues is at 12%. I'm also very pleased to share with you that every one of our segments have delivered strong growth. Small molecules has grown 10% to 400 crores. Biologics has surged 36% to 250 crores. Branded formulations has grown 13% to 147 crores. Syngene has had a very strong growth of 39% to 406 crores. Revenues from operations has also grown 20%, as I mentioned, to 1,124 crores. Other income has grown 27% to 69 crores, largely on account of forex gain, both at Syngene and Biocon levels. And this has, as I mentioned, delivered a 21% revenue growth of 1,193 crores. Now coming to some of our segments which are important for me to mention. Biologics has actually grown on account of a very strong performance across our biosimilars in emerging markets, and most recently we've seen a very important announcement, which is the approval of our pegfilgrastim full filler, which is partnered with Mylan. And this is a very important approval for us, since we are the only company from this part of the world that has now seen 2 successful approvals of biosimilar programs from US FDA. The first was biosimilar trastuzumab last year, and now pegfilgrastim last month. This is indeed a very strong recognition of the capabilities that we have in biosimilar development. Pegfilgrastim or full filler has just been approved and been launched by our partners Mylan in the US market. We will see profit contributions from this particular program towards the shared profit share between Mylan and Biocon, kicking into effect next quarter. But having said that, I think we are very confident that we will be able to deliver on our promised $200 million FY19 numbers for biologics. So this is something that has enabled us to be confident in meeting that target. And biologics will continue to play a very, very strong growth element for Biocon's future growth in the coming years. As far as the small molecules are concerned, we've seen a good growth this quarter. We remain confident of sustaining this growth momentum for the rest of the year, largely on account of both APIs, sales of our immunosuppressants and statins, but more importantly, our entry into the US generics market with our statins is also adding to this growth. The branded formulations business is now a very rationalized business, a specialty business, and both UAE and India now are, remaining on track in terms of now picking up momentum in terms of growth. Syngene, as you know, has also delivered a very strong set of numbers and is confident of sustaining a 20% growth momentum based on the kind of businesses it has entered into, and the kind of long-term arrangements and partnerships that it has.
Well, there's positivity written all around that. In fact, just take a look at the stock. The management is guiding for a strong fiscal, and that's replicated in the stock as well. The numbers look quite good, but after hearing out the management, the stock has moved to the high point of the day as we speak. Pretty good going, but that's really the market today. All the sectors, most of those stocks, they're doing quite well. You look at some broader market stocks as well, the likes of Jacob. Have you seen the airport?
I haven't seen the airport.
Okay. But still that stock is going up. Just take a look at Jacob. Intraday chart should come up for you. That one has taken off. Pull up the intraday chart. Volumes as well picking up on that one. So that's doing well. And a couple of these banking names as well. When you have SBI as well as ICICI Bank doing well, you'll have the Nifty up close to around 150 points. And that's despite the fact the big one, that's HDFC Bank, is seeing some selling today. Remember, that has more than 35% weightage on the Nifty Bank. And that's struggling. In spite of that struggling, still you have the Nifty Bank going higher. But we came in early this morning, and I was having a chat with Mangalam, and he said, Nigel, ITC, that's going to be the stock of the day. And boy, it isn't. Mangalam, smokes on you.
Smokes on me, Nigel, but smokes on no one, actually. Not a good thing. Tell you what.
I was trying to get you on that one.
But just look at that. 300 for the first time.
Let's keep it smoking hot.
Let's keep it smoking hot. Yeah, you have to use all of those puns, but you were talking about contributors to the Nifty. You were talking about some contributors to the Nifty Bank and all of that. But look at that. When the big boy plays, we were talking about good innings coming in. This was a 5-down batsman, ITC. Today, it played so well that the captain had to do nothing but to promote it. It has crossed Hindustan Unilever's market cap as we speak. Now bats at number 4 for the Nifty, and the contribution chart, that one should come up for you. Nearly 70 points on the Nifty, 35 is given by ITC. Reminds you of one of those good cricket matches, perhaps VVS Lakshman. Whenever he plays a very, very special innings.
Absolutely. Very, very special knock today coming in from ITC. But let's find out how you trade the Nifty. In fact, as we speak, we have moved to the high point of the day. Yet again, Axis Bank. That's the stock I think you should be focusing on. That one suddenly made a move. It's moved to the high point of the day. 2% higher, and the entire 2% coming in this hour itself. And even Bharti Airtel is moving higher as we speak. But have you missed the bus, or is there a trade on the Nifty? Ashwini Gujral joins in. Ashwini, what would your advice be to those long traders? In the last series, we saw, what, a 580-point rally. And today, we've started off on the front foot. So 650 points in the last month. If someone had a long position, where should their stop loss be? And if someone wants to take a fresh position, what would your advice be?
See, the point is that, new leadership is emerging. One of the stocks is ITC. But even more important, if you see which banks are down, it is the retail banks which are lower, but corporate banks are moving higher. PNB is up 4%. ICICI Bank, State Bank. So these are the guys you need to focus on, and my sense is that in the days to come, because of the under ownership, short covering, etc., the corporate lenders will have much bigger rallies. So even now, it's a good buy on Bank Nifty, because it started an expansion yesterday. It's found some leadership in State Bank, ICICI Bank. I think we could easily gain another 100 points here by the time we close on Bank Nifty. If Bank Nifty is positive, then you put your stop at about 1175.80, and even the Nifty looks good for another couple of 100 points. So that way, the market now has figured out some sort of leadership, and that's the reason you haven't given back gains today. All sectors remain in the positive. So that way, all dips should be bought. This market is now showing trending characteristics, fairly strong ones. As far as individual stocks are concerned, PNB is a buy with a stop of 82, target of 88. ICICI Bank is a buy with a stop of 287, target of 302. And SBI is a buy with a stop of 288, target of 304.
Right. Ashwini, you spoke about a couple of banks that you're giving a buy on. Not sure whether I should be asking this to you or not, but what are you smoking this weekend? Because ITC is at the high point of the day as we speak. Godfrey Phillips is at the high point of the day. Any recommendation there?
Well, ITC has come out of some sort of accumulation at 290. Now, with that GST news, it hit 360, 370. So an excursion right up to those levels is possible, because this is now the only consumer stock which hasn't rallied in the last few months. If you see today, Unilever, Bajaj Finance, Finserv, IndusInd, HDFC Bank, TCS, Tata Elxsi, Jubilant Food, everything is down. So somewhere there is, a rotation out of those 12 stocks, and things which are under-owned are kind of bouncing back. So I think even ITC could, cover some of the ground on the upside.
Okay, all right. Thanks so much for that, Ashwini. Have a good Friday. Well, Mangalam, I think you're smiling. You spotted a couple of the stocks. Friday stocks, which one?
Friday
is it
stocks?
Jockey? Is it United Spirits has had a good...
United Spirits is up 4%. ITC is up. Godfrey Phillips is higher. But, Nigel, Page Industries, that one should come up for you. That one's moved to the high point of the day. And not just Page, you have Rupa as well, which has moved higher. I don't know what's happening.
Yeah, on a Friday, all these stocks moving higher. I wonder what's the trend for the weekend. They're moving higher. They're not coming down. So.
All right, let's pull up something like a Raymond. Let's see what's happening. Is Raymond moving higher? Not really. Raymond is up about 1% or so. Maybe the suits are for the Monday. Department of Telecom has given its nod for the Idea Vodafone merger. CNBC TV18's Nisha Podar caught up with Kumar Mangalam Birla, the chairman of the Aditya Birla Group. Listen into what he had to say about this.
It's been a long haul process.
It has been.
Yes. So when do we see a final merged entity then?
I think in a few weeks from now, you should see the new entity.
And Mr. Birla, also leverage position with the merged entity starting off their journey, new journey, with over 1 lakh crore rupees of debt on their books. Is that a concern? And what are the remedial measures being taken by the promoters?
So obviously it's a concern, but I think that the capacity of the NewCo to handle this is very high, and it's very high on the agenda both for the promoters and for the NewCo.
But you have already lined up over $4 billion of equity infusion through either asset sale or through the equity infusion and even QIP. How much more to go in the near term?
So difficult to say. It depends on how the competition is playing this out. But I think that it would suffice to say that we would capitalize to the extent required to stay strong.
Well, ITC's numbers were better than what the street was working with, and the contribution chart is telling you close to around 40% of the returns that we're seeing today is solely on account of for the smoking ITC. Mangalam, run us through your analysis.
Well, tell you what, Nigel, if you just took a look at the income statement and thought the numbers and compared it to the poll, it would have been absolutely in line with what the street was expecting. However, the devil lay in the detail. You had to just tap that little ash away, and there you found the fire. Numbers in line, cigarette volumes, they beat estimates. So whichever way you calculate, depending on which analyst is making their calculation, it is anywhere between 1 to 2% on the higher side, 2.3% as well. FMCG business, that one did well. So not only the cigarette business, the FMCG business did well as well. In the last year-on-year, there was a 10 times growth in the FMCG operational performance. The EBIT grew 10 times and the revenue was higher by about 14%. The stock, most important, trading at 27, 28 times after today's move right now, currently around 30 times 2-year forward earnings, which means it's still at a 30% discount to the sector average. So that means a lot of money perhaps may be moving to ITC for the near term, given there is EPS growth and valuation comfort. So cigarette volumes, that was a positive. FMCG comparable EBITDA grew by about 86%. And why is the FMCG 10 times growth in FMCG important? Because the first quarter of ITC for their FMCG business is usually the weaker quarter. That trend should come up for you. In the last few first quarters, this is the FMCG business. You would see sequentially there is a decline, but if you take a look at just the first quarter, there has been some improvement. So 16 crore was a loss in first quarter FY15. That reduced. Then there was a profit in the previous quarter. Now it surged to around 50 crore rupees. So this is something that we will be watching out for. Hotel rooms were charged higher. There was strong F&B growth, so that was good. And the paper business was also good. Brokerages are all of them are pretty upbeat on the stock. Target prices ranging anywhere between 350 350 to 390 rupees, and the stock is moving higher.
Absolutely.
Stainless Hisar is the stock on our radar on the back of a slightly tepid set of first quarter numbers. To discuss this and more, we have Mr. Jagmohan Sood, the COO of the company, joining us on the phone line now. Thanks a lot, Mr. Sood, for joining in. I see your revenues have declined by about 4%, but there has been a mild volume growth of about 3%. So in that case, if you could tell us a couple of details, what kind of volume growth are you targeting for this year? Are the realizations under pressure? So what kind of EBITDA per ton are you targeting this year?
Hi, good morning, Najal and Manglam. Let me start with a very good news first. We have just been, rated A- from BBB+ by the CARE rating agency. The outlook revision 45 is JSHL's strong financial profile, along with its ability to maintain adequate liquidity and exhibit efficient capital management.
The total debt on your books, sir, is how much?
It's about 2,700 crores.
2,700 crores. How much do you borrow at? Because I see an outflow of close to around 90 crores per quarter in terms of finance costs. So what is your finance?
This includes total financial cost, and the long-term debt and the working capital debt is about 2,700 crores, and then there are some other financial arrangements of the tune of...
What would the total financial arrangement be then, including long-term, short-term, and the financial arrangements that you're talking about, Mr. Sood?
Yeah, short-term is about, another short-term, arrangements are about 800 crores in terms of LC, and the overall, financial cost is about 9.7% for us.
Okay.
And we see, decline in overall interest cost, financial cost, quarter on quarter. And we expect our total interest cost, financial cost in this financial year to the tune of about 350 crores.
So, Mr. Sood, you are borrowing at 9.7%. Post this rating upgrade, how much will it come down to?
Yeah, we expect at least 0.5%, reduction in the financial cost.
Okay.
Yes, from next quarter. So coming back to your question,
yeah,
the kind of volume, what we had invested and how much we had got. You see, the stainless steel quarter on quarter, if you, from last year, if you see, there has been improvement of about 3% in the volume.
Okay.
And the volume growth has been 3%, whereas on the sequential quarter, you will find the volume has declined about 10%. So you see, the stainless steel market is basically, there is some seasonality effect. Quarter 3 and quarter 4 generally remains, very, very strong because of the last quarter of the financial year.
Right. Mr. Sood, sir, sorry to interrupt you on that, but, we're running a little short on time. So the broad details that we want to know is, what is your sales volumes target, sir, for FY19? What kind of a number you can look at? And compare that number with FY18. Go ahead, sir.
Okay. So this year we have kept our sales volume target at about 780,000 tons.
Okay.
And out of that, about 10% we are targeting in very high niche volume from specialty product.
Okay.
And about 55% from high, value-added cold roll products. And we are right on our targets.
Okay.
In quarter 1 also, we have achieved 100% in these two segments.
So, in that case, what is your blended EBITDA per ton likely to be, sir, this year?
Yes, this quarter we have been able to maintain 11.8%, and your question is
per ton.
Relevant.
EBITDA per ton.
Looking at the the current conditions, currently the stainless steel industry has been impacted by unwarranted imports from countries like China and FTA.
Okay.
Imports are now being routed through, FTA countries like Indonesia, Malaysia, and Vietnam, harming the domestic industry. Moreover, there is a 2.5% import duty on key raw materials levied on stainless steel scrap and ferronickel, both of which are domestically unavailable.
Correct.
This creates an uneven ground for domestic players.
Okay.
And moreover, there is a huge price increase in electrodes and the oil and all those consumables, which creates huge pressure on our bottom line.
All right, Mr. Sood, thanks a lot for joining in. In the meanwhile, there is some news which is coming by on NMDC.
Yeah, they have increased prices by around 150 rupees. We'll have to wait by and see where exactly have they increased prices. Is it just, for the Chhattisgarh plants, or is it for Karnataka as well? Because the offtake in Karnataka was struggling. So keep an eye on that. Yes, positive news coming in there for the time being, but you need to track what's going on in Karnataka, because of there, the offtake really has been lagging. But this is positive news. Bulk of their sales are from their plants, in the north rather than south.